Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Market rundown heading into Wednesday, February 8th. So the S&P 500 came pennies away, well, dollars away from the all-time high, 2300.99, and we got up to 2299.40. So within $3, but we couldn't quite get through, and then we saw profit taking. Now, the bulls are still holding up just fine. We have higher lows multiple days in a row, and we have the overall higher low pattern. We would have to lose the middle Bollinger Band daily support in order for me to even consider looking bearish in this market that's on the verge of all-time highs. And we held that 4 times last week, so still watching that level. There is a little gap to the downside at 2283.97 to be watching, and the middle Bollinger Band is going to be right there over the coming days. We are on the verge of a bullish MACD cross, and this is an ascending triangle pattern where we have multiple tops, a horizontal resistance line, and a higher low pattern with a tightening range as we approach a breaking point. So the S&P 500 is getting tighter and tighter. You can see the first 2 days of trading this week, the weekly chart, extremely small range of the candlestick, but we did already break the high of last week, so there's enough pointing in favor of the bulls that I'm not going to give the bears any credit and be looking to the downside until we get proof of the bears' strength, which would be a loss of the middle Bollinger Band. That's my main criteria, not looking bearish on the markets as long as that middle Bollinger Band is support. So looking at IWM, it's been the weakest of the names. Look at this tight channel for almost 2 months at this point. Bollinger Band, resistance, support, just back and forth. No clear breakout in either direction. And the channel I'm currently watching is 134.49 support and 136.98 resistance. So the bulls are absolutely in control. We're on the verge of a bullish MACD cross here as well, but we're just lacking that follow through to break this little lower high pattern and head back towards the all-time high. The weekly time frame, you can see that straight across trading. It's still bullish consolidation. Look where we came from after the election. It was just a straight shot up for 5 weeks, and now it's been multiple months of consolidating. Look how much we've given back. We didn't even give back the full gains on that last bullish week. We still have these 3 huge bull weeks before it, but we haven't even given back in over 2 months of consolidation that one candlestick of gains. So QQQ, new all-time high today. We know it's the lead bull, and it keeps proving why. So we had a 125.92 resistance broken. We got up to 126.55, a little bit of an upper wick of profit taking, but the bulls could care less. They got their all-time high. They're happy, and we keep seeing higher lows. Haven't even gone near this middle Bollinger Band support in all of 2017. Weekly time frame. Upper Bollinger Band resistance is 126.75. That's the only resistance to be looking at besides psychological levels, as we are in blue sky breakout mode, and we are very strong. We have not seen a significant red week make that 6 weeks. And it's been nothing but upside since the election. Same thing as all of our markets. Just need that one last push to the upside to see all-time highs for the S&P 500. So keep in mind, we are 0.3% roughly from an all-time high. Could occur any day that the bulls show up, and we'll see if we can get that by the end of this week. I appreciate you watching. We'll check back in tomorrow. Update that middle Bollinger Band every day. That is the key support.